Okay, welcome back to Loans Elevated. Today we are talking about down payment assistance. A lot of clients call because they, one, may not even recognize they have access to a down payment and they feel like they need support to fund a down payment to buy a home, which we are all for. Although I would like to start this episode with some alternative options and some ideas that would help you avoid legitimate, true down payment assistance programs, because the fact is, nothing is really free, right? Down payment assistance doesn't come without some sort of expense or negative attribute to it, because it's beyond what regular loan programs are designed for. So the alternative options, high level, that we talk to a lot of our clients about is, one, do you have a 401k or some sort of retirement plan that you could either get a 401k loan or a loan against the retirement plan, or even perhaps a hardship withdrawal? Because buying a primary residence, often under many of the programs, qualifies as a hardship. So you could either get a hardship withdrawal or a hardship loan, which allows you to access those funds to help with the purchase of a home much cheaper than otherwise. So you won't face the early withdrawal penalties, for example, on many programs. And the loans definitely no penalties or taxes due on those against retirement assets. A couple other options that are maybe less prevalent, but if you have a free and clear auto, like a car that's free and clear, a truck, an RV, a boat, a motorcycle, anything that is an actual hard asset, you can go to the bank or the credit union, get a loan against that. So say it's free and clear and it's worth $10,000. You can go to the credit union, get a loan against that. You'll have to determine with them how much they're willing to lend you against that asset. But those funds, borrowed funds against a hard asset, are allowed to be used towards the down payment of a home. The last thing would be gift funds. If there's family or friends that would be willing to gift you money to help support you with the down payment and help you buy the home, that would also be an alternative option. Now, I talk about these alternative options right up front because these programs can be, although the down payment assistance programs are largely better than not buying a house and renting instead. It is definitely better than that, but it is not better than finding one of these other solutions that could help you fund the down payment, because the expense on these programs is significant. Now, we do them all the time, so I'm a fan of them. Just if we can avoid it and there's another option, it is oftentimes better. So a few options that are available here locally in Utah where I'm based. There are multiple options in other states that are similar, but I'm just talking about the ones here in Utah, which is where I'm based, although we can do loans in all 50 states. So reach out to me if you want information about that stuff. But Utah Housing is a company that offers multiple down payment assistance programs. There's FHA, conventional, and VA programs that qualify to help you fund the down payment or closing costs on the purchase. There are some income limitations and credit limitations. So for example, on an FHA loan, we can technically go as low as 500 credit score. However, on this program, you have to have at least a 620 credit score. And even at a 620 credit score, because of the extra fees on these programs, the costs it's still going to cost you a lot of money out of pocket, nearly as much as it would cost you for the down payment on the home. So Utah Housing is one option. The second option, which is also income limited, but also limited to the amount. So you're not guaranteed to get all of the down payment funded or all the closing costs, but it could supplement the cash you have now to help speed up the process to you becoming a homeowner, whether you leverage cash and savings that you've saved and then stack these on top. But there's government grants. So we have the government, cities and counties, the municipalities, often there's many of them that have grant programs that you have to qualify for. And like I said, there are limitations. They're generally designed for first-time home buyers, community heroes such as first responders, some medical professionals, different people like that, and veterans. So they're a little more siloed to who qualifies. Often you have to be a first-time home buyer, community hero, or a veteran. And they'll offer, it depends on the city, but generally somewhere in the range of $5,000 to $15,000 generally is what they'll offer, and you do have to qualify. So that's another option. Now the third option is a relatively new option. This comes from Freddie Mac, which is one of the two government agencies or government-sponsored entities for conventional financing. Freddie Mac offers a program up to $2,500 to supplement your total cash to close on the down payment or closing costs, however that shakes out. They will give up to $2,500. But again, income limits apply. Now, also homebuyer education is required on these programs, so there is a little bit more work involved for the person looking for the financing. But what I was speaking to earlier is the expense. Besides the grants don't generally cost anything to qualify for or apply for or be awarded. It doesn't cost you any extra, but they are more limited than some of these other programs. Utah Housing in Utah is the most common down payment assistance program that gives greater flexibility on income. And that program is very expensive. Generally speaking, you're gonna pay, let's just take a regular priced, $450,000 home. It's gonna probably cost you $150 to $200 more per month to use that program on the same house. And up front, although it allows you to finance a lot of these fees into the mortgage, up front you're paying somewhere between, it's probably $6,000 to $7,000 in additional fees for the use of that program for the down payment assistance. And when you compare that to putting a small down payment on the same $450,000 home and avoiding the additional $6,000 or $7,000 in fees, the return on that down payment investment, if you can come up with the cash in one of the alternative options we spoke about in the beginning, is outstanding. So that's the big takeaway. There are options. The options are definitely better than not buying a home and renting instead. However, if you can come up with an alternative approach to funding the down payment and getting into a home without the use of these programs, you're generally better off financially. Outside of that, there are a couple of programs that allow a 100% financing that is not down payment assistance. These are just standard programs. That would be VA. So if you're a veteran with entitlement to use a VA loan, you can buy a property with no money down, and often us lenders can structure the loan in a specific way to help cover the closing costs as well. So you come out of pocket with $0 completely. USDA, which is rural housing, that's another option. There are only certain areas, like in Utah, Saratoga Springs, Eagle Mountain, Tooele, and those are in the main Wasatch Front. Those are the primary areas that would qualify. Outside of that, you've got to get very far south or very far north or very far east, and you still qualify. But that one's very similar to VA. The qualification there is the area of the property, but it allows you to finance 100% and even possibly finance the closing costs into that mortgage and come out of pocket with $0. So that's down payment assistance in a nutshell. My take on it, my strategies around it to avoid the costs, and some other programs that might serve the same benefit that you may not have known about. I hope this is useful. Thank you for tuning in. We'll catch you next time.